I'm now joined live from Sydney by David Lennox. He's resource analyst at Fat Profits. Welcome to you, David. Good to see you.
Hi, Lindsay.
So oil prices, are they headed higher from here?
Yes, look, we certainly have the view that oil prices are going to push a lot higher. We do think in the short term we are looking for a target of somewhere between US $107 to $115 a barrel for West Texas. The reason we say that is because although we see that the West, or the coalition of the willing, have basically got control of the air, we do believe that it's going to take considerable more time for the populace to actually push through and remove Gaddafi from power. While we've got that uncertainty, it will certainly, I guess, people will look to see whether it's going to spread to countries in the region a lot more than it has currently, and we do think that that will be underpinning a stronger oil price going forward.
So what is priced in terms of the price right now? Are investors pricing in a cutoff of supplies from Libya altogether for, say, the rest of the year?
Look, we would expect that if Libya stopped producing oil right at this very moment, that there would be a number of other countries that have got the spare capacity to actually move in and replace that oil. I think that's the primary reason why we haven't seen the oil price spike much higher than the 103 that it's currently trading at. So look, where it goes from here will be very much determined basically on the fear factor in terms of how far I guess the regime changes may spread, and we've already seen that Bahrain is facing some significant difficulties in terms of its leadership. So look, that's certainly I think the driving factors that will push oil higher. Libya is now probably fully priced in, and in fact the market's probably suggesting that their supply for the short term will perhaps diminish or stop altogether.
What about the demand side of the picture? I mean, I suppose this all depends on what you think global growth is going to look like for the rest of the year. Will Japan, after the earthquake, for example, will that impact demand for oil?
Again, we would expect that if the oil price does stay above $100 US and move higher for a significant period of time, we will see some crimping in global growth, which will obviously have an impact on the oil demands from the major economies as they, I guess, adjust to a slower rate of growth. So yes, we would expect that oil, if it does stay at sustained levels, will in fact crimp growth and will lead to slower or less demand for oil. But again, it's probably in the US where the biggest demand factors are brewing, and that's the US consumer. They're the biggest consumer of oil, and we do believe that their confidence at this point in time is probably not high. And while they're not high, they're not driving. While they're not driving, their demand for gasoline is low, which is flowing back through the world supply.
All right, David Lennox, we've got to leave it there from Fat Profits. Thanks very much for being with us.